Hello, and welcome to this BitDiver tutorial. In this video, I will guide you through the risk allocation section, a valuable tool for understanding the different types of risk your crypto portfolio is exposed to. Whether you are a beginner or an experienced investor, this page is designed to help you better assess how you are allocating your resources. The risk allocation section in BitDiver allows you to analyze the various types of risk affecting your crypto portfolio. But before we dive into the specific indicators available on the platform, let's take a step back. What is investment risk? Risk represents the possibility that the actual return on an investment differs from the expected return, potentially resulting in capital loss. In other words, it's the probability that an investment will not deliver the desired results, or in the worst case, will decrease in value. On BitDiver, each risk indicator is accompanied by a numeric value, from 1 NADA's low risk to 5 FADA's high risk. A color bar summarizing the overall rating. The greener, the lower the risk, the redder, the higher the risk, and a pie chart showing how your capital is distributed by risk level. Let's go through them one by one. The first indicator is total risk, which measures the overall risk level of your crypto portfolio. A low value, such as 1.22, means the portfolio is built cautiously, with relatively stable, lower risk assets. Higher values, like 4 or 5, indicate greater exposure to potential capital loss, suggesting you should pay attention to avoid imbalances. It's important to remember that in the crypto world, some exposure to capital loss risk is normal. Compared to traditional investments, price swings are generally more pronounced, a key fact to always keep in mind. The second indicator is technology risk, which evaluates the robustness of the technologies underpinning the cryptocurrencies in your portfolio. A low score, like 1.18, means your assets are built on secure, well-tested infrastructure. Higher scores may indicate less mature or potentially more vulnerable technologies. Adoption risk measures how widely accepted, used, and integrated your portfolio's cryptocurrencies are in the market. A low risk suggests popular assets with a solid user base. A high risk may point to less known cryptocurrencies or those with fewer real-world applications, and therefore greater uncertainty about their future. Next, you'll find 2 volatility indicators, tracking price fluctuations over time. 24H volatility, price changes over 1 day, 30D volatility, price changes over 30 days. The volatility risk helps you understand that an asset's value can change significantly in a short period, making it harder to decide when to add or withdraw capital. Similarly, you have 2 liquidity indicators, 24H liquidity, how quickly you can sell an asset within a single day. 30D liquidity, the same measurement, but over a month, liquidity risk helps you realize how long it might take to find a buyer willing to purchase your asset. If liquidity risk is high, you may struggle to sell quickly at your desired price, and could be forced to sell at a discount to recover capital fast. Finally, 2 indicators help you assess capital concentration. Crypto concentration risk, whether your portfolio is overly reliant on a few cryptocurrencies. Wallet concentration risk, how your funds are spread across wallets or exchanges. A high score, such as 5, signals strong concentration and calls for attention. If your portfolio depends heavily on a single asset or wallet, any issues in that area could impact your entire strategy. In summary, the risk allocation section provides a complete, objective view of how much overall risk is in your crypto portfolio, which categories of risk you are exposed to, technology, adoption, liquidity, etc., and where you might act to improve balance and resilience. It's a valuable tool to gain greater awareness and make more informed decisions for the future. That's all for the risk allocation section. If you'd like to explore your portfolio further, I recommend checking out the other reports available on BitDiver. And remember, for any questions, you can always reach BitDiver support through the help section in the top menu of the platform. See you soon, and happy analyzing.